Hello and welcome to the Wendell Effect for the Indian markets for the week of the 19th of March, 2023. This is Brandon Wendell, your host, and I'll be guiding you through my view of the markets. So we're going to go ahead and first of all remind you that we are not registered broker-dealers or investment advisors. Taking a look at this information from an educational standpoint only, not telling you to buy or hold any particular securities and giving any personalized recommendations. There's always risk involved in the markets. That's always a situation. We cannot eliminate the risk. We can just try to minimize it, and we're also not subject to trading restrictions, so we can have a position in a security or initiate one at any time. Please stay in touch with me if you got any feedback or any securities you would like me to take a look at. You can email me at brandonwendell.cmt@gmail.com. Also, you can follow me on Twitter, as I do tweet on a regular basis about the Indian markets as well as the American markets for the futures, as well as stock. And please hit like and subscribe on this video so that way you'll be able to, and then make sure you get notifications as well so that we'll be notified when the new videos come out on a weekly basis. Well, we'll take a look and see in the Nifty for last month. It was pretty beat up for the most part. You can see there was only a few spots of green for the most part, all the way red. You got utilities, some industrial services, and some process industries that were green. But other than that, very, very red for the last month. And even in the last week, it's pretty much the same. Some of the big names out there, Reliance, TCS, Infosys, HDFC Bank, very, very bearish, and doesn't look like things are going to change very much. Looking at the Nifty weekly chart, the big rally we had from the middle of last year, we have retraced 50% of it already, and while there is a little bit of demand here, we're really at the cutoff. Coming into the new week, if we see the momentum in the RSI on the weekly chart dip below 40, then we will likely go below this demand and reach down towards 16,248 in the next month and a half. However, if this is the bottom, we need to break out to the upside, stay above 40 with the closes on the weekly RSI on the Nifty, and if we break the high of last week, then we should be able to continue to move up and make new highs before the end of the year. So this is kind of the cutoff now. We got to see which way are we likely to go, up or down. And the market will tell us. But looking at the daily chart, we actually do have a positive divergence where prices made a lower low. The indicator made a slightly higher low. That's suggesting a possible bounce. Now, we did make our move already where we imitated the previous impulse 100%. So if this is as far as we go and we do break down, our next downside target is 16,558. However, because of this positive divergence, there is a possibility of rallying back up to 17,750. Well, what we'll see, and you can see there's buying pressure at the end of these candles here, if we do break out above the 17,145, then like I said, this next week I would expect us to move up towards the 17,750. Otherwise, if we do see that the lows are breached, we should continue moving down, probably to about 16,200. On the 4-hour chart, you can see we are retracing a little bit. We got that same divergence where we're moving down very well in price, but not so much in momentum. And the momentum's changing, trying to pull us back. If we do rally, we also have 17,400 as our next target before we get a pullback on this rally. So wait to see on Monday if we start to break to the upside. If we're able to continue, that's where we should be stalling first, is about 17,400. Otherwise, again, that selling pressure kicks in and takes us lower. Now, looking at some of the small pieces in there, you see Reliance was very, very weak. When we tried to bounce here, we couldn't get the RSI to go in a bullish territory above 60. We even made lower highs and now lower lows. Does look like this is going to continue down this week to 2150. That's my downside target before we get another meaningful bounce out of Reliance. And that's obviously going to put some weight on the Nifty itself. Additionally, TCS is looking very weak. There's nothing here to hold us up. No demand, and the momentum is very strong to the downside. So everything is pointing downwards. We could break 3129. Obviously, that would be our next bouncing point, but we went right through the previous target, so we could go all the way down to 2959 before we see any meaningful buying pressure or a bounce coming in. On Infosys, pretty much the same thing. Again, we're making these new lows. We're getting more momentum to the downside. That's giving more weight to the fact that we might be continuing down in the Nifty this week as well. There's just nothing there showing any kind of buying pressure coming in. So we are looking like we're going to continue to sell off and see a lot of bearishness on these stocks. Oops, sorry. Next we have HDFC Bank, as you can see, we started retracing. We've retraced 38.2%. And once again, though, we have more momentum to the downside. So these are small bounces that we get. We're not likely to see much more of a bounce here, but we still haven't hit the demand that was here. It was I think it might have been weekly demand, honestly. It was a sideways basing that we were in here. Because if we're looking at this as a daily demand, it would be a little bit lower at about 15.15, the top of the demand zone. So we'll see, but it does look like we should be able to push down more towards the 1476 as our next target. And finally, ICICI Bank, we see lower highs, lower lows, pushing prices down. We failed to get above 60, so we make new lows. If we get another bounce, we're only likely to get up to about 857 before we drop down to 778. So I'm seeing ICICI looking very, very weak as well. So looking at the Nifty Bank Index, going to the weekly chart there, keep jumping around on my mouse. You can see that we are trying to bounce off a demand zone, which is also a 50% retracement of the overall upward move. However, well, we didn't break 40 on the RSI, so we should have enough buying pressure to push us back up. So even though we saw some of these individual banks like ICICI, HDFC being very bearish, the Nifty Bank Index actually is looking a little bit bullish, which is probably being brought by smaller regional banks rather than the large ones. But this does look a bit bullish. Going into the daily chart, you see that positive divergence leading to a bounce right now, at least a retracement. We're not done retracing. We should be able to get up probably about 50% here to 40,136. If we're going to sell off, I would say that's probably the high point that we start turning around and dropping towards 36,766 as the next demand. However, if there is an underlying strength that does come in, not seeing it so far. The weekly saw a little more bullishness, but not on the daily. So we might just be a bit choppy and sideways. But if we do try to rally, we're definitely going to stall out before we break that supply at 41,208. Oops. And finally, on the 4-hour time frame, well, again, pretty much the same. If we do try to rally, which really doesn't look like we should rally much, we may try to move up to 39,776 or even this 136. But if we should rally, we're going to run right into supply here at 41.4. So keep an eye out for that. Now, looking back at some of the trade ideas we've been following first, and then I've got some new ones. The following ones, we were looking at UCO Bank on the daily chart, and we did bounce off our entry, only made a small move and came right back down to our entry point. But we have less bearish momentum now, so we should be able to continue up and reach that target on this next impulse up. Don't chase if you haven't gotten in on time. Unfortunately, IOC, this was a long opportunity. It was the right idea to go long, but we never got the entry. So now that we've hit our first target already, it's going to be very difficult to try to take a long there as well. Don't expect it to pull all the way back. If anything, it may just pull back to about 78 before it tries to bounce again. So you'd have to make an adjustment here. But I'm not following this trade anymore because it hit my target before the entry. So, new trade idea that I have for this week, NTPC, 80% of the time from March 19th to April 21st, it has rallied over the last 10 years. Average return is very good too, 6.12%, as you can see. Very, very bullish. Only lost 2 out of the last 10 years. So, looking at the chart here on NTPC, you can see on the daily chart we have an area of demand that if we're falling back, that's where I'd like to buy, around 172.80, 169.85 with the stop loss below, targeting Fibonacci projections at 183.90 and 190.80. So looking for a pullback first before we can rally, but overall this is a very bullish time for this stock. So, hopefully you enjoyed that analysis. If you have any questions, please let me know. You can hit me up on email, brandonwendell.cmt@gmail.com. You can also follow me on Twitter @TraderBdub, and you can search for the Wendell Effect. Please, 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 if you would, hit like and subscribe, as well as notifications. That way you'll be notified when we put out the video every week. Until next time, everyone, trade safe, trade well, and take care. Thank you.